All right, let's talk about the City of Kitchener's 2026 budget. Now, I know what you might be thinking, budgets, numbers, boring, right? But stick with me here, because this is way more than just a spreadsheet. It's basically the blueprint for the city's real estate market, and it's going to have a direct impact on your biggest financial decisions. So yeah, let's dive right in. I want to start with just one number. That's it, 2.2%. Just take a good look at it, because this one little figure, it's really at the heart of everything Kitchener's planning for the year ahead. So what is it? What's the big deal? Well, that 2.2% is Kitchener's property tax increase. And here's the kicker, it is the lowest in the entire Waterloo region. I mean, by a long shot. This is the cornerstone of their whole strategy, which they're calling the Affordable Today, Ready for Tomorrow budget. It's a pretty clear signal that they're all about being fiscally disciplined right now.
Okay, but if you're a homeowner, you know that property tax is just one line item on a much longer bill, right? It's just one piece of the puzzle. To really get a handle on what it costs to live in Kitchener, we've got to look at the whole picture.
And that brings us to this term you're gonna want to remember: total annual impact. This is the number that really matters. Seriously, because it's not just property tax. It bundles together the increases for your water, your sewer, and your stormwater bills. This is the real, honest-to-goodness bottom line for the average family.
And check this out, this is where it gets super interesting. The grand total for that annual impact is $117, but that 2.2% tax hike we just talked about, that's only $29 of it. Take a look at this. The biggest slice, a whole $45, is actually from sewer services. Then you've got water and stormwater right behind it. It's just a great reminder of how much those utility costs really add up and affect your wallet.
So, okay, $117 a year. Is that a lot? Is it a little? I mean, a number like that doesn't really mean much on its own, does it? It needs context. So let's see how it stacks up against the neighbors. It's time for a little regional price check.
All right, so here's the real question. How does Kitchener's whole affordability game plan actually look when you put it right up against Waterloo and Cambridge? Let's find out.
And wow, this table, it tells a crystal clear story. Just look at that property tax column. Kitchener's sitting at 2.2%. Meanwhile, Waterloo is at 6.4%, and Cambridge is at 4.86%. I mean, that's a huge difference. Now let your eyes drift over to the total annual impact, the number that actually hits your bank account. Kitchener, $117. Cambridge, $160. And Waterloo, a full $180. The gap is it's stark. And trust me, that's not by accident. It's all part of the plan.
This chart just makes it so visually obvious, doesn't it? This is what we can call Kitchener's affordability advantage. That gap you see between the bars, that's not a mistake. It's a very deliberate, calculated move by the city to make itself look like a more attractive, more stable place to put down roots. That difference is real money in residents' pockets, and it's a huge selling point for anyone thinking about moving to the area. Okay, so we've nailed it down. Kitchener is going all in on affordability. But what does it actually mean for you if you're out there trying to buy a house? Is 2026 the year to finally pull the trigger?
Well, for buyers, it's kind of a mixed bag, A bit of good news, a bit of a trade-off. The great news is that with lower taxes, your carrying costs are way more stable and predictable. That makes budgeting a whole lot easier, and you might find you have a bit more power when it comes to negotiating. But the trade-off is that home prices are expected to stay pretty flat, or maybe even dip a little. So if you're looking for a quick profit and a big equity gain in the short term, this might not be your market.
So, knowing all that, what's the game plan if you're a buyer? First off, think long-term ownership, not a quick flip. This is about finding a home, not just an investment. Second, with more houses on the market, you should absolutely leverage that to negotiate a better price. Third, it's always smart to focus on those neighborhoods that are always in demand, like a Beechwood or a Westmount. And finally, and this is crucial, get pre-approved for your mortgage before you start looking. That way, when you find the perfect place, you can jump on it immediately.
Okay, let's flip the coin. What if you're on the other side of the for sale sign? What does this new, more balanced market mean if you're trying to sell your home in Kitchener? For sellers, the opportunity here is that Kitchener's whole affordability pitch, it can actually boost buyer confidence. It could bring more people to your open house. Plus, stable city services help keep your neighborhood and your home's value looking good. The challenge, though? You've got to be realistic about pricing. The days of crazy bidding wars and rapid price jumps are on pause. This is a more balanced market, which means slower growth.
So, if you're a seller, you've got to be smart and adapt. The #1 rule is to price your home strategically right from the very beginning. Get it right on day one. And in your listing, you should absolutely be shouting about Kitchener's affordability advantage. It's a huge plus for buyers. Don't forget that a little investment in curb appeal goes a long, long way. And hey, just be mentally prepared for negotiations to take a little more time. It's just the nature of this market.
All right, so we've looked at it from the buyer's side and the seller's side. Now let's zoom out one last time and look at the big picture. What's the overall outlook for Kitchener's entire real estate market in 2026? This quote pretty much says it all. Prices are expected to be flat or even dip a little bit. That's a massive change from the roller coaster we've been on for the past few years, right? But what's really behind this shift to a more stable, balanced market?
It really boils down to 4 key things. Number 1, local job stability. Super important. Number 2, the city's ongoing investments in infrastructure. Things like parks and trails that make it a great place to live. Number 3 is just general market sentiment. How confident are people feeling? And finally, number 4, those regional dynamics. How is Kitchener stacking up against the competition right next door?
And let's just double-click on that first point for a second. At the end of the day, everything, and I mean everything, in the housing market is tied to the local economy. Job stability is, without a doubt, the single most critical factor that's going to support demand and keep the market healthy. So, that brings us right to our final question, and it's a big one. Kitchener is very clearly placing a huge bet on affordability. It's their strategy to win the future, right? To attract families and talent and new investment by promising value and stability. But in a world where the economy is always changing, is that bet going to be enough? I guess that's the multi-million-dollar question we'll see answered over the next few years.